From the floor of the CME Group, this is Danny Riley on this February 24th. You know, look, we've been struggling to try to figure out the direction of the markets over the last couple of days. And as we said on Monday, you know what we needed to see was a little bit of back and filling. And late in the day yesterday, around the 1091, 1093 level, the S&P started to back and fill. And then late in the day, in came a buy program. And that pushed the market up into, well, I want to say really it pushed the market back up to the 97 level on the close. But what that did, it was a really, really good close based on the way the markets were acting throughout the day. That has kind of somewhat set the tone for today's trade. The market opened up a little bit higher this morning and then sold off. And when it sold off, when it got down to the lows down at the 94 level, this desk in particular put out instant messages, and we were talking about how quiet it was right before the API, the crude oil numbers came out. And if you looked at our instant messages, you'd see that it wasn't that far off that we were saying. The desk was saying things like, hey, it's too quiet to sell here. You know, if you were really, really bearish here, you should be concerned that, you know, we could get up, rally a little bit based on how quiet it was. And a couple of minutes later, the S&P went right into a buy program, traded up to 1103, and then after that backed off a little bit and then went up to 1104, right into the middle of the resistance that we put out on our equity report. You know, the way it's working here is, I think it's fair to say that a lot of people are confused about the direction of the markets. They just don't know if they want to put money to work this early in the year, and also we're going into the March 9th low of where the S&P made its low last year down at the 766 level, or 666 level, and this is going to be a spooky time for a lot of people. Anyways, what we're going to do is we're going to look at some of the 50-day, the 100-day, and the 200-day moving average in the S&P. Now yesterday at the low, at the 90-40 level, we held above the 100-day moving average, which comes in today at 1089.80. So that's a significant thing. But on the upside, the 50-day moving average comes in at 1105.60, and today's high is 1104.5. So I think we think the way this will work is if the market can close above, you know, the 1106 level, we probably got a very good possibility of seeing the S&P up into the 1118, 1112 level. You know what? We get all this negativity going on, the market sells off a little bit, then it regains its footing, and then it goes right back up. And this is very, very similar to the way the markets acted in 09, and they're starting out the year again acting the same way. You know, as we go into the end of the month, you know, hold on, I got to get this, hold on. You're gonna have to clean this up. All right, I know, but I'm fucking up. As we go into the end of the month, and as I tried to say a little bit earlier in the clip, there is a model that we look at. It's called the Bradley model. If you go to Google and you look up Bradley model, you'll find out that there's a system there that we look at, and it actually goes on a sell signal in the middle of March. Well, you know, we've got that low that we made on March 9th of last year, and this is going to be a scary period for the stock market. But as of right now, the markets are holding good. You know, it's quiet down here, so we're not seeing a lot of selling pressure, and we've seen a little bit more buy programs than we have seen sell programs. We'll be back tomorrow with more Mr. Top Step updates.